A very good afternoon to everyone. Today, the Banking, Financial Services and Insurance Board of the Institute of Cost Accountants of India is organizing the webinar on the topic Assessment of Loans based on digital footprints of borrower and business entities and not on balance sheets of MSME segment. This is based on our Union Budget 2024-25. And we have with us our learned speaker today, CMA Dr. P. Sivarama Prasad sir. He is the former Assistant General Manager, State Bank of India. We welcome you, sir. Namaste, sir. From the institute, namaste, sir. From the institute, we have CMA Chitranjan Chattopadhyay, sir. He's the chairman of the BFSI board, ICMEI, and he is in absentia today. He's stuck in some important meeting. So, and he has sent his best wishes for the program. We also have with us our HOD, sir, CMA Dibyendu Roy, sir. He is also not joined today due to some important meeting today, and he has also sent his best wishes for the program. And we have our other BFSI team members. So we welcome all of you. So just before we start, we are playing the Institute anthem, and then we will continue with the program.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय ॐ शान्ति शान्ति शान्ति.
So now I would like to introduce our speaker, CMA Dr. P. Sivarama Prasad sir. Sir is a qualified professional in cost accountancy, company secretary, finance, commerce, insurance, and banking with experience of 36 years in banking and financial services with cross-cultural experience and good knowledge in the insurance sector. He is a fellow member of ICSI, the Indian Institute of Banking and Finance, Insurance Institute of India, and the Institute of Cost Accountants of India. He is the former regime of SBI, and he is also faculty of our BFSI board. We welcome you, sir. Now I would request our speaker, CMA Dr. P. Sivarama Prasad sir, to take over the session. Thank you, sir.
Thank you, madam. Thank you.
Thank you.
So the PPT is visible, madam?
Yes, sir. Yes, sir. It's visible.
And it is moving, madam? Moving?
Yes, sir. Yes, sir. It's moving.
My voice is also audible.
Yes, yes. Audible, sir.
Okay. So, good afternoon to all. First of all, thanks to BFSI board for giving me an opportunity to discuss about banks lending through digital footprints. This is a new concept. So this is very useful to the banks to reduce the cost, to improve the accuracy, to mitigate the credit risk, and what not all. So this is an interesting topic, and the same was introduced in 2024-25 Union Finance Budget Madam Nirmala Sitharaman announced in future, whatever the lendings are there, particularly MSME lendings, the max for MSME lending is the plant and machinery 50 crores, the turnover is 250 crores. So all these things, particularly the MSME sector or the individuals are appraised by the banks through digital footprints only. Today we are in the digital, particularly digital fast implementation is there in almost all areas. And the government of India also announced digital, they are aiming for a digital India like that. So in this scenario, how the banks are going to handle the credit portfolio through digital footprints, I will discuss up to 6 o'clock. This is an interesting topic. It is an interesting not only to you, but also to me also. And I'm doing some research or particularly I'm updating the knowledge, particularly on the digital footprints. Once the digital footprints are introduced in the bank, the accuracy, the time will cut short to process the loan. Even 5 minutes is sufficient. 5 minutes I can process the loan. I need not wait months together. You bring that certificate, this paper, that the financial statement, this financial. I don't ask anything. Simply, I require the KYC documents. Whether it is an Aadhaar card or PAN card or whatever the KYC documents are there, one or two if you provide, then the system will process and the system will interact, the system will access the relevant websites and within 1 minute or 59 9 minutes, the process will complete and the borrower is eligible this much amount or this borrower is not eligible for this amount. So once that is there, the quick disposal of a loan portfolio of the banks will happen. And the non-performing assets will reduce drastically. And the bank funds are to be utilized properly. And the banks, the profitability will increase. Once the cost of operations are decreased, definitely the surplus or the profit of the bank will increase tremendously. This is there in almost all developed countries. And that's why this is implemented in India. And for that, the banks are developing one tool. That tool is called, particularly, the tool I will discuss later on, the technology tool. I will discuss in due course about the technology tool. That is called Business Rule Engine, BRE. Business Rule Engine, INENGINE engine. Earlier, we are going to the astrology. The astrology people, they will give some predictions. In the later when I am discussing, foot astrology is now it is outdated on account of digital footprints. According to the foot lines astrology, lines and marking reveals stress, hidden talents and positive energy, while horizontal lines indicate the stress of barriers. Vertical lines means positive energy and strength. The modes and the birthmarks symbolizes the specific traits or potential issues. This is earlier whenever we are approaching any astrology people, they will take the footprints of the foot also, not only hands, but also foots. Some astrologists, they will tell, all these things are predictions. Now, this is outdated. The latest one is the footprints, the information technology astrology. So this is these footprints are actual data, accurate data, instant data, costless data, and financial and non-financial footprints. Everybody is having the full financial and non-financial footprints. It is very easy for us to get that footprints. So that's why the earlier one is outdated. The new one is the digital footprints. What is a digital footprints? Suppose the digital footprints are available to any organization, whether it is a banking or insurance or business organization, whether it is an employment or whatever the activities are there for the individuals, the digital footprints are available through one Aadhaar number. If at all you provide your Aadhaar number, I can get your digital footprints for the last month where you have visited and how much you have spent and what items you have purchased. All these things are possible because the KYC documents are linked to almost every activity. PAN card or mobile with the network, mobile number, that is also sufficient. Or email address or face recognition. Whenever you are visiting to the airports, the Digi Yatra, you said, Digi Yatra, it captures your face and it compares with the Aadhaar face. Aadhaar, the server, your face already stored and your the handprints are also there. Your iris is also there. It is very easy to capture where Mr. Prasad is going and for the month of August, what are the footprints of the Mr. Prasad? It is very easy to available. Very easy. Which place he has visited, what type of items he has purchased, how much revenue or how much income he has got in his account, particularly in the savings bank account or current account, whatever the accounts are there, how much deposits are there, whether he has filed the tax or not, how much GST, all are available with the help of these important documents. That's why digital footprints are available through iris fingerprints at the time of Aadhaar application. At the time of Aadhaar application, they will take the fingerprints also. All are captured in the Aadhaar server. Now, it is mandated for every financial, non-financial transactions. Your KYC document like Aadhaar or PAN number or passport are compulsory or non-financial and non-financial transaction. Today, if you want to book a gas connection, Aadhaar is required. If at all you want to book you visit to the hotel, your PAN card is required or Aadhaar card is required. And if at all you want to transact your trading in the BSc or NSC, the Aadhaar is required. Income tax, Aadhaar is required. Everywhere, bank account, Aadhaar is mandated. So the bank account opening, online booking like travel tickets and SIM card. If at all you require SIM card, the Aadhaar card is required. To open an email, mobile number is required. Mobile number is also linked to the Aadhaar and get mobile connection and Wi-Fi connection. If you want to get any Wi-Fi connection in your house, the IP number, internet protocol number, the Aadhaar is required and gas connection and registration. Whenever you are selling your property or purchasing a property from anybody, the Aadhaar card is required. And stay in hotels. Whenever you are going to stay in a hotel, then they will ask your Aadhaar card. And purchase of gold or silver after threshold limit, that is also required. And get a credit card. To get a credit card, Aadhaar is required or PAN card is required. To enter into airport, they will ask the Aadhaar card or if at all Digi Yatra is there, your face recognition and filing income tax return, etc., etc., etc. So many things, particularly daily activities from the morning to night, whatever the activities you are completed, all are linked with the KYC guidelines. So if the KYC documents are there, it is very easy for me to extract Whatever your activity from the morning to night, I will capture with the help of various tools that are available in the information technology. Wherever you go, earlier, wherever you go, Hutch follows. That is a slogan. Wherever you go, Hutch follows. Now, wherever you go, your digital footprints follows. So month end I am receiving from the Google Maps. Mr. Prasad, you have visited Pune, you have visited Bombay, and Bombay you have stayed in the hotel. All pictures are available in the Google Earth. Whenever I am accessing any particularly website of any website, immediately I am getting call. Yesterday I asked AC, particularly air conditioned Samsung. Immediately after the accessing the particular web, immediately I received two calls. Sir, are you searching for any Samsung air condition? So your footprints always is available to all the people. Even though we are talking about it is a closed system, it is not a closed system today. It is an open system today. And examples of a digital footprints of the individuals. Whatever the individuals, first up to 40 minutes, I will discuss about the digital footprints. After that, how the digital footprints are useful in the credit appraisal of the banks, I will discuss later on. Now, let me discuss about the digital footprints of the individuals or the companies, etc. Browsers. If at all you browse, any browse, I am searching for digital footprints browse. How many browsers I access? All our history is available in the Google website. Your browser is exchange of different kinds of information websites. Whatever the browsing I'm doing, all or the data is available on Mr. Prasad, cma.bsrprasad@gmail.com. IP address. In your the IP is a unique number, internet protocol number. Whatever the IP is there in my IP, whatever I am doing from the morning or for the last 1 month or last 1 year, all are recorded. IP address. Every device you can use access to the internet is assigned a unique identification string of characters called IP address. And you can think of the same thing, digital fingerprint. And threat players may use your IP address to track your location and frame your cybercrime or launch a compiling scams, etc., etc. So the IP address, through IP address, if at all IP number is there, through that IP number, what are the various websites is accessed, and all data is available or stored in various servers across the world or within the country also. And social media. Today, everybody is accessing social media, whether it is a YouTube or a Facebook or the Twitter or Instagram or TikTok, all are your digital footprints. And your social media interaction, such as likes, shares, posts, uploads, friendship requests, more grow your digital footprints. It is very easy to catch the person where he is located now, and what type of websites he is accessing, and the total data is available in servers, various servers. And online banking that expands your digital footprints. Whenever you are doing tickets purchase, footprints are available. Online purchases, whether it is Amazon or Big Basket, whatever it is there, all are available digital footprints. Credit card or debit cards. Whenever you are using a debit cards or a credit card, you are going to the POS point of sale machines. You are swiping the machines. Once you swipe, your digital footprints are captured. And buying and selling of goods or services through UPI or QR code or Phone Pay or Google Pay, whatever the pay is there, all are captured the digital footprints. Transaction to crypto or digital currency like CBDC. If at all you are doing the activity of a cryptocurrency or a central bank digital currency, then that footprints are also available. Foreign exchange, if at all you are purchasing any foreign exchange, $1 or $2 from the bank, definitely they will ask your PAN number or Aadhaar number. There, your digital footprints are captured, and selling and stocks, shares, demat account, what not all, and prepaid cards or Vishwayatra cards, whatever the cards are there, different types of cards, that is also your digital footprints are there. And subscribing financial newsletters, shopping online, and the use of POS machines, payment to different merchant outlets, wherever you are using your card, either it is a debit card or credit card, digital footprints are available. And the ATMs, whenever you are they insert the card in the ATM, one digital footprint. And CDM, cash deposit machine, digital footprints. Beyond all these things, CCTV cameras are also captured your face, and all these things. Today, it is very difficult to escape from the digital footprints by the individuals or the business entities. Businesses or nobody is escaped. All are captured in one way or other form. So tomorrow, in the coming days, it is very easy for the sovereign of the state to know how much wealth is having, how much deposit is having, how much real estate is having, how much cash is having. Cash means not physical cash, the central bank digital currency. All are, it is very easy to the government to get that information. So all the footprints are available. That's why IT plays a vital role in the coming days. And to reduce the gap between rich and poor, the IT plays a vital role in the coming days. And your online shop behavior. Suppose a credit card history. If you see the per month credit card history, Mr. Prasad, how much a higher amount is spent on while using the credit card? Whether he is using higher amount for restaurant food or clothes or gold, it is very easy. I need not draw a diagram and the Excel sheet. All these things are not required. Even today also, the banks are giving through internet banking the pie diagram of your transactions. Out of the total 100% transactions, you have used travel purpose 20%, food purpose 10%, clothes or whatever it is there. That is very easy. That too on real time basis it is possible. The component of your digital footprints, whether you shop, website, mobile apps, or online platforms, on carry record of your shopping habits. Whether Mr. Prasad is a vegetarian or a non-vegetarian, whether he is going to visit the frequently the non-vegetarian or vegetarian hotels or whatever the data is required, I don't engage any people with the help of information technology that is available. Your personal information, such as your name is available, address is available, contact information available, credit card, debit card. Today, that's why you are open to the economy. You are not a closed person. You are open to the economy. So the Google Maps, every month I am getting in highlights, cities visited by Prasad, places visited by Prasad, your all-time data regions visited, monthly information provided by the Google. Once I am carrying the mobile, wherever I go, my digital footprints are moving together with me. Digital activities can grow. Digital footprints are using trackers like fit trackers, reading trackers, time trackers, subscriptions, health records, health related diagnostic reports are also captured. Subscribing to newsletters, blogs, vouchers can shape your digital footprint. These activities reveal your habits, your taste, your market to the marketers. So that's why wherever you go, your digital footprints will follow. It is not, I earlier, what is a Mr. Prasad income? What is the expenditure? What is the wealth? Our banks need not ask all these information. with the help of the particular KYC documents. It is very easy. Instantly, I don't spend much of time by keying the number and press the enter key. Then the system will process and populate the data, the Prasad's history, that is the Prasad's biodata, not biodata of educational qualification, biodata of his income, expenditure, all these things. So it is more accurate. All are available with his Aadhaar number only. Whatever the data I have collected from various websites, all are available from the Mr. Prasad's Aadhaar number, Mr. Prasad's PAN number, etc. And emails and text. Emails and text message you send are the part of your digital footprints. Some entities can mine this data for valuable information. And the online forms, whenever you are filling the forms, information you enter online forms. When shopping, applying loan or requesting is stored on a computer somewhere, this data can be valuable to the marketers. Your mobile data is available across the country. Your email also available across the country. And which bank, how many loans you have used, all data is available with the help of your KYC documents or Aadhaar card like that. Public comments, your opinion, share the message of boards, social media, news websites, and significantly impact your reputation and your credibility. And examples like YouTube, etc. Whenever YouTube you are accessing, when you are giving your opinion, then automatically it captured. Your digital footprint is captured. Blog posts, strongly opined blog posts are significant impact on your brand and a clear example of your digital footprints. It is everywhere. That's why I told wherever you go, your footprints will follow. Digital footprints will follow. And digital footprints, analyzing internet crimes, identity, security, lock, privacy, data, and all are available instantly without spending much time, amount also. It is available. It is already available. It is captured in the various servers. That's why the banks are using that information instead of wrong information. Some people are giving a wrong information whenever the financials are asked by the banks. Some other banks they are telling whether it is true or not, I don't know. Some other business entities they are preparing 3 balance sheets. One is for tax purpose, one is for a bank loan, another is for filing ROC, etc. How far it is true, I don't know, but this is a rumor floating in the society. So if at all I am taking the wrong information and the wrong results, that is called GIGO, garbage in, garbage out. So that's why I'm taking the accurate data, correct data, and updated data, that is called digital footprints of whether the business entity or the individuals. It is available in various servers that are there in the country. Hence, wherever you go, your digital footprints. So all these things are your digital footprints, and the business also digital footprints are there. Whenever I am asking sales to give the working capital loan, they will tell, sir, my growth rate is this one, that one, this one, that one. And authenticity, accuracy, even though some of the audited balance sheets are there, and later on, that is also false information. In that particular scenario, once the banks are lending the public money, they have to save the bank. Wrong data is always a danger. It increases the credit risk of the bank. And importance of the digital footprints in the banking sector. Now I will discuss about the digital footprints in the banking sector. And whatever I have discussed earlier, all are the present, the individuals Whenever I am going, if at all I am going by Ola or Uber to some place, it is already captured. Once I am paying that Ola money or Uber money, it is debited to my account. That is also captured. Once I am giving any amount to others through internet banking or Google Pay or Phone Pay, whatever the pays are there, it is captured. So that's why the digital footprints are tomorrow. The government is also thinking about the land records, the property title deeds, like sale of shares and shares. You are selling the shares to demat account, particularly the 3-in-1 account, the trading account, the demat account, and savings bank account. Tomorrow, if you want to sell your property through online only, you need not visit to the registration office also. The government is also designed that one, and now in the villages also, the Panchayati Raj systems, they are mapping with the help of drones each and every property, and they are giving the tickets like the QR code tickets. Once that is there, it is very easy. When I visited to Australia to study the best banking practices, in Australia, only one small card is a title property of the house. And if at all the flash, the barcode is there. If at all the bankers are flash on the barcode, then for last 30 years, who is sold the property to whom? All particulars are available on. I don't want to engage the services of the legal experts to study the document, whether the document are good document or not, whether any encumbrances are there or not, whether the taxes are paid or not. I need not ask all these things. So that's why the government is also started that activity. And the digital footprints play a vital role in the banking lending process in order to best credit decision making process or to verify the major issues involved in borrowing entities and prospective borrowers. To sanction the loan, sometimes 1 month, 2 months, appraisal, all these things are there. If at all wrong data I am appraising, the results are wrong. The current ratio or debt equity ratio or debt asset turnover ratio or the credit asset turnover ratio, whatever the profit, the earnings ratio, earnings per share ratio, all are based on the accuracy of the data. Today, all the companies they are uploading the information. Some of the companies through XBLR they are uploading the information with ROCs. If I take the data, then automatically the accuracy of data will happen. And the right results means for firm how much is eligible for working capital or term loan, whether the creditworthiness of the borrower is there or not, it is very easy. That too within 1 hour, I can assess the loan process. So the first step to mitigate the credit risk is the digital footprints are required. Otherwise, a bank's credit risk is increased. What is a credit risk? Default risk is called credit risk. If at all I have taken a wrong documentation, pay slips or income tax returns, on that returns I appraised and given the loan to the borrower, then later on, if the loan is turning to bad, then it is a problem to the bank. Problem to the bank means a problem to the depositors. This process helps the banks anticipate the prevent, mitigate adverse impacts, and therefore it have been given utmost important forming the lending decisions. Quality of digital footprints have the direct impact on loan closing. To close a loan, to give or not to give, only binary decision. Binary decision will give by the technology, that is business rule 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 engine, ENGINE engine, BRE. Today almost all banks they are in the process of developing BREs, business rule engines. Once the business rule engines are ready, then to get a loan, it is a real time possible. To buy a ticket of airlines, real time is possible. To buy a ticket, a cinema ticket, real time you are getting, in the real time only you will get the loan. You will get the loan So that's why once the funds are transferred from one account to another on real-time wages, so that is a RTGS, a real-time gross settlement scheme. Why not lending? Why not a transfer of a property from one person to another person? That is not impossible thing. That is a possible thing. The technology ruled all these business organizations in a better manner, in a best manner, and costless, and the revenue of the organization will increase tremendously. The process of verifying digital footprints covers retail borrowers, whether individuals who is applying for car loans or home loans or education loans or personal loans, the digital footprints are very useful. Borrowing entities, whether promoters or directors or partners in case of partnership or sole trader or companies or LLPs or trusts, all digital footprints are available in the websites, in the relevant servers to consider the capability, credibility of the people operating the company. Today, disqualification of the directors. It is very easy to get it. I need not put hard efforts, and group companies or subsidiary companies. Today, one company to another company, another company to another company, another company to another company, the funds are moving. It is very difficult. It is not difficult in the present scenario because the footprints are available. Wherever they are moving the funds, it is very easy. That is the power of the technology. That is the power of the information technology. Any companies where directors are interested, all are easy, very, very easy. Digital footprints are a lending decision process. Decision process. While lending the loans today, 24 hours your car loan, housing loan within 24 hours. Banks are giving advertisements. Earlier, you bring that document, salary slips, 6 months, income tax returns, 6 months, the property title deeds, and the property title deeds are given to the valuer, and the title deeds xerox copy given to the advocate to verify the authenticity of the document, and to give the particular valuer how much the value, property value. All these things in the present scenario is it is a wasteful exercise. So the digital footprints are useful in lending decisions. Like Vande Bharat speed, the lending also that much speed. Not Vande Bharat, even bullet train speed. Bullet train speed, the loans are possible in the banking system. Once the BREs are implemented, business rule engines are implemented, you need not visit to the bank also. All are through digital processing. KYC documents. Once through BRE, it captures the Aadhaar card, it captures the PAN card, it captures whatever the linked are the document numbers are captured various servers, income tax server also, and it gives the full information. The KYC earlier, you bring your Aadhaar card. I need not. Tell me the number, boss. That's all. Tell me your PAN number. That's all. Over phone. That is enough. You verify the Aadhaar card whether it is a genuine or not. Xerox copy verified. The original with a Xerox copy certified. All these things is not a correct process. It is an outdated process. It is a redundant process. Now your customer document mandatory and regulatory requirement to identify these details of entity individual customers. The object of authenticate the identity of the real person and confirms that the transaction not made in the name of the fictitious person. To arrest the denominator transaction or shell company, the mole transactions. Today the transactions are 30% of the transactions are I'm using the other accounts, that is called mole transactions, and that is also very easy to capture with the help of digital footprints. Shell companies, nearly 5 years back, 4 years back. The Minister of Corporate Affairs, given information to the banks. Nearly 50,000 shell companies are there. Please verify the current account. If the company is not exist, close the current account, inform to the MCA through Reserve Bank of India. I verified nearly 5 accounts. Out of 5 accounts, one account in apartment, only boards are there, but crores of rupees transactions are happening in the current account. Today, the suspicious transactions every day that is available to the Minister of Finance. That is available. So the suspicious transactions of the banks. Now coming to documents which can be used for KYC includes a PAN, Aadhaar card, voter ID, or passport, or electricity bill, or driving license, or rent, business registration, signature verification. In case of all are linked to the PAN, either PAN and Aadhaar card. Whenever the sale of your property is happening, or purchase of the property is happening, or shares trading is happening, all are linked to the two important documents. That documents are none other than your Aadhaar and PAN, which is a unique numbers. Unique numbers. So once these numbers are given across all the servers, the big data, it is instantly. I need not use more time. I need not break my head. Instantly, the information is available. Registration of companies, ROCs. To verify the name of the company, authorized signatory, disqualification under 164 subsection 2 of the directorship list of charges, all are available, particularly with the help of a digital footprints. And once I have given the number, then it accesses the MCA government of GOV, that is MCA 21 server. Once I have given PAN number, the system hits the other server. Once I have given the other number, hits the other server, PAN number hits the this one, and it hits the ROC if it is a company. ROC website. And all directors, how many companies the director is having, whether 10 or 20 or 15 or whatever the number is there, all are easy to detect. And once I have given the PAN number or other number, immediately the business rule engine, it hits the CIBIL report. And the CIBIL shoot filed accounts. Today, CIBIL shoot filed accounts are there. Whenever the banks are filing shoots, immediately they will inform to the CIBIL. And CIBIL is different, CIBIL shoot is different. And it hits the CIBIL shoot, how many cases are filed against under this number. Then they will list out, they will provide that information. All are in the fraction of seconds. So I need not break my head. I need not verify the hundreds of pages and all these things. No paper, nothing. Only two numbers. Only two numbers. That is Aadhaar and PAN number is suffice for me. Immediately the business rule engine of the banks for credit lending, it hits the CIBIL shoot file and get the information. The CIBIL shoot file, banks can check the shoot file cases against the company or its directors by using the name and the DIN number. That is shoot.cibil.com. Immediately it goes. Because all are now the open systems, not closed systems. And watch out investors. And once I have given that number, it goes to the watch out investors. Watch out investors will provide the information for orders reported by different regulatory bodies like banks, willful defaulters, CIBIL, CRIF, high market rate information, Experian, and Equifax, BSC Limited, CBI, IBC, Information Utility, MCA, and RBI, ECGC, Caution List, and Employees Provident Fund, etc. Watch out investors. cbl.com. Once I have given the number of the company, it hits that particular site and get the information, collect the information. If at all I am asking the borrower, he will know, sir, that I have not not evasion, not evade the particular any tax, or I am regularly paying the employees product and all these things. He will tell, but I don't require that information also. Only two information in case of company PAN number or the TAN number or the certificate of incorporation, that is suffice to verify the business entities total information, and it goes to the different servers and catch that information and provide that information on one screen only. And create information view. Today, any borrower who visited a bank to get the loan, if at all I ask her for what purpose car loan, do you have any loans with our bank? No, sir, I'm not taking any loan from any other bank. If at all I keying the information, nearly 24 pages CIBIL report will come. This bank, that bank, this bank. If at all because of some of the borrowers, they may not aware. They may not ever, that's why they will give the false information to the bank. I'm not used any loan from any bank like that. Once I have taken the CIBIL report, the CIBIL report is 24 pages, means number of banks he has taken loan from different credit cards, banks, etc., etc. So once I have given that number, the Aadhaar or PAN number, it catches the CIBIL report. CIBIL shoots are different. CIBIL report is different. CIBIL lenders, they consider the borrower's credit score, number, type of account, history, making payments. CIBIL reports to be extracted the parties involved in the loan transaction to verify irregularity, delay, servicing the loan and overdue. All information is available, and the system will scan the report and give some scoring to each the borrower. And based on the scoring, only final scoring, whether he is eligible for the loan or not, the system will give. There is no human intervention in this process. The criteria of the CIBIL score depends upon the lending institutions, particularly the CIBIL.com, Google search. The Google search also based on the emails, and Google search including IBBI, Mineta, or Indian Canon, etc. It will, wherever the information available, the business rule engine hits that particular website and plays an important role in this process. Google search of the company directors strings like fraud, default, Central Bureau of Investigation, or Enforcement Directory, or bail, or raid, all are available. Today, that is not a big problem. That is not a big problem. So that's why the technology is powerful. So wherever the person is, it is very easy to catch hold of the particular person with the help of unique identification numbers like Aadhaar or PAN number or the cell number or the email address, etc., etc. IBBA, insolvency and bankruptcy. To check the matters listed with IBBA, company's name, file orders, whether it is NCLT or NCLAT, with the help of information utility, that how many cases the filed by under that particular company, all information, directors' names, all are available. So the banks, while giving the lending, particularly the corporate and mid-corporate loans, they will hit that particular information utility of the IBBA. Mineta, to verify the political connection of the directors. So www.mineta.info, the system, the business rule engine hits that particular one, Mineta. And whatever the directors' connections are there with the political parties, that also it is very easy to locate. That's why I told, wherever you go, your footprints will follow. it is very difficult to escape the footprints of the individuals or the business entities in the information technology arena. Legal cases. To check the legal cases listed in the company or director's legal action, Indian canon.org. That is also it is. And legal cases, NCLT or NCLT, verified from NCLT.gov.in, exposed dash order dash judgments dash page and high court and particular high court cases available from the websites of the high court. Market due diligence. So the market due diligence also inquire about the prospective borrower. Market inquiries from the investors, competitors, existing bankers, suppliers, customers who can give more clarity about the borrower's character and business. All these things are available. Searching. Whenever your property is given, we have to register in the central government the server. That is called the Central Registry, Securitization, Asset Reconstruction and Security Interest. So the business rule engine hits that SRSI also. Whether the property given by the borrower is having any charge or not, from the SRSI website, it is available. SRSI, that is Section 8 of the Companies Act 2013. To check the property is free or clear liens encumbrances, www.sersai.org.in, sersai/home.org. Here also. So whenever we are giving that information in the business rule engine, it hits all the websites and catch hold of the information and provide that information under one page or 2 pages like that. And the legal entity identifier, LI certificate. This is also very important in the company's angle. Today, banks are insisting for a LI identifier certificate. Whether the company is a good company or bad company or whatever the irregularities all are, they will verify and they will give the certificate. LI certificate. Actually, this LEI certificate are being mandated. LEI numbers of expiry dates to be included for all the initiation receiving the transaction of INR 50 crores and above. Earlier in India, LEI obtained from the legal entity identifier, that is Clearing Corporation of India, CCIL, which is also recognized an issuer for LEI by the Reserve Bank of India. This applies to non-individual customers, RTGS and NEFT transaction. Whenever it is happening through LI is compulsory for that company. And RBI also set a time limit to the borrower obtain LI with the borrower's total exposure 25 crores or more required 30th last year. And it is followed by the 10 crores. Now it is compulsory for all who enrolled with the LI by 30th. Now it is below limits also, that is compulsory. The LI reports are also required. Once I have given that number, then automatically it catches the different servers and give whatever the information about the company, whether it is a good or bad, promoting transparency, efficiency and security of the financial market. The business loans, the LIs are required by the business loans to strengthen the financial supervision and enhancement of the risk management in the economic system. That is also possible. Now, risk management of LI improves the counterparty understanding and relationship assessment, fostering the stability in finance. Regulatory oversights, regulatory bodies like RBI, SEBI mandated LEI and compliance of the international standards. So today, escape from the technology is a very, it is a remote chance. Okay, whatever the systems are there, some people always thinking about in a different manner. Whatever the loopholes of the system is there, whatever the weakness of the system is there, they will try to encash Today, that is also not possible. And 99% accuracy is there. 99% security is there. 1% or 5% or 10% max. Every system 100 proof may not be possible. May not be possible. Dun and Bradstreet, DNB, they are having worldwide data of all companies. And once the banks are also requesting that Dun and Bradstreet to hit that particular server, but that they will charge. Okay. The leading global provider B2B data, insights, even AI, particularly artificial intelligence driven platforms that helps the organization around the world growing left right. Even your footprints, not only within the country boundaries. If at all you move to other countries also, it is very easy to capture the data. Then Bradstreet, particularly data cloud, which comprises of more than 500 million records, and fuels solutions delivers insight of the empower customers to grow revenue, increase margins, build a strong relation, help stay compliant even changing times. 1842 companies, since 1842, companies every size has relied Dun & Bradstreet to manage risk and reveal opportunities. Miscellaneous. The RBI default list is there. Once I have given in a business rule engine, it hits RBI defaulters list also. And a bank defaulters list, it will list SEBI, credit rating, loan account, statement of the bank, and bank account statement ought to be checked thoroughly. Even if at all you are giving your Aadhaar number, then banks, the BREs, it will hit other bank servers also and give that information to the bank. Other banks accounts also. Some of the people, they are thinking only this state bank means state bank server only, they will verify. They may not verify the other banks. That is today it is also possible. It will hit the other bank servers and any loans are there. Today civil report is nothing but all banks data is available in civil report. And the latest information, particularly current accounts, if at all any opened in other banks, that is also possible. And the RBI defaulters list or ECGC, Export Credit Guarantee Corporation, the defaulters list also available. Now, most of the above mentioned footprints of the prospective borrowers linked to business rule engine, that it is called BRE software. So the digital footprints are available. Once I have given, only I am not given the name, address, and all these things are nonsense. Simply Aadhaar, PAN card. Then within short span of time, how much is eligible for what purpose, all these things, even documentation, if at all it is linked to core banking system, the documents, digital signature, if at all it is available, then the loan will be closed. I need not, the customer need not wait hours together, weeks together, months together. And I need not ask about the quarterly returns or monthly returns, stock statement, that statement, this statement, this income, that income, cash flow, that flow, or funds flow, all these things are not required. In the coming days, through by way of technology, get the loan from the bank, and it is very easy, not only to the borrower, but it is good to the bank to mitigate the credit risk. So that's why the business rule engines are developing by the banks, and this is announced by Madam Honorable Finance Minister Finance Minister Nirmala Sitharaman Madam announced in 24-25 that don't take into account of the balance sheets. Even whatever the ROC audited, uploaded, from that the system will calculate the ratios with the help of XBL or information, extended business reporting language like that. Now, thereby, lending process of a bank simplified through digital footprints. It is a paperless, it is a low cost, it is on real time, and it is more accurate, and the credit analysis analytics is possible. Yes or no? My answer is yes or no, only binary answer, 0 or 1. I need not discuss. I don't want to waste the time. Only the answer will provide. If not, what is the reason? If yes, proceed. Total data is available with the help of the important documents, that is Aadhaar and PAN number, or the certificate of incorporation, or email, or particularly the cell numbers, or company's incorporation, etc., etc. Company's PAN number or TAN number, all are available, or GST number. Now, I will discuss about two important areas. So many areas are there. In detail, I will discuss two areas, how the banks are accessing that particular websites, and how the data accuracy, all these things I will discuss in detail about the particular two areas. Two areas. Lending and credit process consists of three steps. In any bank, pre-sanction. Before sanction the loan is called pre-sanction. Sanction the loan. Once a pre-sanction is all respects correct, sanction the loan, and post-sanction. Today, the first step and the two steps are taken care of by the IT, by the BRE software. Earlier, army of people are engaged for pre-sanction and sanction. Today, that army is not required. Only post-sanction, recovery. So, due diligence, certification, authentication, take care of by the BRE, business rule engine. Hence, concurrent audit, credit audit are simplified. Only one step they have to verify. They need not to verify the pre-sanction. Already system 2 plus 2 is equal to 4. Once it is correct, the BRE software is also correct. 2 plus 2 is equal to 4. If that answer is 4 correct, then BRE software, that much accuracy is there. That much accuracy is there. Hence, the concurrent audit or the credit audit of banks are simplified. It mitigates the credit risk of the frauds, will minimize. The default risk, credit risk is nothing but a default risk. The default risk will be reduced, and the banks, particularly the frauds, will minimize drastically. The banks of the future will be the software companies. Because today, the main input of the bank after deposits are not manpower, IT, information technology. So some of the banks, they are already started to float the subsidiary companies to support it to their bank. Otherwise, other companies are supported, then they will ruin the banks. That's why today almost all banks, they are floated subsidiaries, particularly the IT companies. Banks of the future will be the software companies. Why? Because IoT, Internet of Things, drives the future banking and financial industry. It will drive. No paper, nothing. All are accessing, collecting matrix, sanction, digital formats, signatures, loan created, automated. Man is replaced with missions, not missions. Man is replaced with information technology. Hence, the cost and management accountants, CMS, must possess a comprehensive understanding of and proficiency with the latest developments in the information technology. Otherwise, it is a question mark. It is survival is a question mark for any profession. I am not talking about the CMS. If at all I am not aware of the technology developments, I am outdated, I am redundant. My skills are not useful. Thereby, they will emerge the leading professionals in the financial market once they are updated. Definitely, they will become the leading professionals. No, this one is a big firm that is 20 years old, 30 years old, 40 years old. That is immaterial in the present scenario. Unless until you are equipped with the knowledge of artificial intelligence, cloud computing, APIs, or whatever the Internet of Things. And whatever the latest development that the fintech companies all, if you aware, they will emerge as the leading professionals in the financial markets. 30, 60 years, it won't count anything. It won't give any result because the transformation is completely happened. The old outdated data, outdated process, redundant process, even in banks also. If at all I want to see the voucher, even withdrawals are not available. In future, the checks will disappear. In future, the ATMs will disappear once the central bank digital currency is introduced. And I am expert in ATMs, I am expert in cash deposit machine, I am expert in cash department. No use. No use. So hence the cost and management accountants must possess a comprehensive understanding of the proficiency with the latest development in information technology. Thereby, they will emerge the leading professionals in the financial market. That is my suggestion only. Now coming to subject, the union budget, particularly 2024-25, presented by the Finance Minister, Madam Nirmala Sitharaman, on July 23rd, had announced new credit assessment model for micro, small, medium enterprises, where banks will assess them based on digital footprints, NOT, not on their balance sheets. Some other people in the banking also, I'm expert in CMA data, I'm expert in ratio analysis, I'm expert in analyzing the, no use, no use, no use. Unless you are equipped with the knowledge of the latest developments, the business rule engine, or whatever the latest technology that are adopting by the banks. If you are updated them not, you will become the expert in the market. You will become the leading professional in the market. Some of the people, even in the bank also, I'm the credit expert. So what? That is a primitive stage of banking. Today, the modern banking is entirely different. Assessment of loans based on digital footprints of the borrower or business entities and not on their balance sheet. Innovative information technology products and solutions already placed in the banks. Today, the cash transactions are very, very less in the banks. The cashier's counters are also reduced. The cash retention limit of the bank is reduced. Even ATMs also, the number of hits are reduced drastically. How many people are using ATMs? Today I traveled from my bank, State Bank of India, Koti to my house. Then I asked the Ola person, do you have the change? No, no, sir. You use QR code or Phone Pay or Google Pay. Still, we are talking about our country. It is not possible. That is not possible. Only the small coconut vendor also, sir, you credit it to that QR code is there, sir. We are talking about financial inclusion. No, digital education is more in the country. Okay, still some places it may be there, but most of the people are knowledgeable. That percentage it is very easy to they complete that one also. So data aggregation GSTR analysis tool is there in BRE2. Bank statement analyzer tool is there in BRE2. Financial analysis tool is available in BRE2. And the credit monitoring ITR and AS26 analysis tool is also available. I'm discussing only two items. So many things are there. It goes to different servers and catch that information and collect that information. With the help of Aadhaar card, with the help of PAN card, or in case of company, with the help of a PAN or a TAN or whatever the certificate of incorporation number, etc., etc., etc. Then it will scan and give the information at one particular base. This information, if it are manually collected, it will take 2 months. Analysis another 2 months. And with accuracy, question mark. Accuracy is a question mark. So here, particularly in the BRE engine, data aggregation GSTR analysis tool is there. And the bank statement analysis tool is there. And the financial statement analysis tool is available, and the credit monitoring. If it all goes to different banks accounts and what are the transactions, and it will segregate and give the total information at one place. And the GSTR analysis, it accesses the GST website up to date, whatever the statements uploaded by the company, how many defaulted, how much amount, how much refund he is claiming, all available, real time, updated, instant. Financial statement. Whenever the borrower is submitted, I have to search where the current assets, where is the stock, where is the cash, where is the data, where is the business receivable and the current liabilities, and that is divided with this the current ratio. In same data, all these things, keying, all these things are that is outdated, redundant the process. And ITR returns, please submit ITR returns. Then I have to send the ITR returns to another professional. Please verify and confirm, and I have to pay 1,000 rupees per return for confirmation. Whether he is confirming correctly or not, that is also a question mark in my mind. Under 26 years. So that's why now the technology is hitting those websites and collect the information and give it one place, and analysis is also possible. Innovative information technology products. Now banks are developing business rule engines, either in-house or from the market through reputed information technology companies, which are useful in lending process for corporates, for mid-corporate, for MSMEs, for individuals. Keeping their focus on banks, core objective is these tools are improve the quality of the credit pricing. Today, why the non-performing assets are increasing? On account of credit quality is deteriorating. Credit quality is deteriorating. So once this hits are there, quality will increase. Okay. After giving the loan, if the borrower misappropriated, that is a different issue. Even in banks, 100% recovery is impossible thing, impracticable thing. In any business, some bad debts are there. In the bad debts in banking is called non-performing assets. The business of powering paperless credit analytics for financial institutions, simplifying the process, unstructured data. Companies' financial statements are different. Bank statement of State Bank is different. Punjab National Bank is different. Punjab Sindh Bank is different. Union Bank is different. How to collect that information? What type of that information? I don't know the abbreviations of different banks. But all these things are taken care of the BRE, Business Rule Engine. Multiple formats, multiple locations. One is at ROC, one is a CIBIL, one is at particularly CERSI, another is a different locations, it is a spread. Collect these things is a difficult and Herculean task. Quick decisions are not possible. If at all I ask the borrower, today they will submit two papers, tomorrow they will submit another two papers, like stretching there by delay processing. Once the delay is a cost escalation will happen. More accurate in lenders. Thereby the financial institutions are get advantages like a reduction in credit risk, increasing the operational efficiency, enhancing the transparency in lending decision and process. That's why the digital footprints are useful to the banks. The advantages like mitigate the credit risk, increase the operational efficiency, enhancing the transparency in the lending process like that. Now, I will discuss two tools only because up to 6 o'clock I have to complete this one. Only two tools. But my suggestion, my request is to update the knowledge, particularly what is happening in the financial markets. Once you are updated, once your technology expertise is there, definitely you will become the number one. Not 30 years I am in the market, 60 years in the market, that holds no use. See, staying ahead of the curve is a paramount of the lenders seeking to inform decisions of borrowers' credit worthiness. Today, if at all I asked the borrower, provide the profit and loss account. To get the loan, some of the borrower, few of the borrowers, they will escalate that particular information. They will increase that information. Once the sales are more, they will get more working capital. But again, I have to visit to the borrowers this one, and I have to verify the registers and audit it. All are is a time-taking process. The goods and service tax return analysis tool emerges as a game changer, providing lenders with a comprehensive real-time view of the borrower's financial health. Even here also, some loopholes are there. Okay, 100% accuracy is impossible thing. 95% or 90% is also okay. But the GST analysis emerges a game changer. Whatever the loopholes are there, that will be taken care of the government of India. That is not our business. The innovative tool devolves GST data, extracting valuable insights that is shaping the lending decisions, whether to purchases or the sales. Accuracies available and adopt a more transparent, efficient and a credit evaluation process. Credit evaluation process. This is now that's the State Bank of India. Within 1 hour, we will sanction a loan to the MSME by taking into account of the online GSTR return analysis. Banks, State Bank of India is introduced one product, a working capital product to the MSME units. GSTR analyzer, particularly this is one tool in the business rule engine. To access and analyze the goods and service taxes returned filed by the business entities or companies. These returns are treasure of financial information, providing the detailed account of the company sales, purchases, input tax collected, credits and tax liabilities all are available at one particular point. By hitting the bank's BRE engine to that directly hits that the permissions are available to the bank, not for all the people. And directly hits and get the information based on the GSTR number, etc., etc. By tapping this data, lenders gain a holistic understanding of the borrower's financial performance. So I don't want that balance sheets. I don't want that a particular P&L account or this one. Helping the assess the creditworthiness of the greater accuracy. Okay, if at all some pitfalls are there or some loopholes are there, definitely the government of India in due course, day one, all systems are not pakka. Over a period of time, the systems will rationalize and improve their performance, and after certain time only accuracy levels will increase. Day one, any system is not 100%. At the time of implementation of ATMs, if you insert the card, your account is debited, but no cash. But sometimes 2 times cash. Today that is not happening. Because all these things, once it is rolled out, then only the problems will arise in the technology. So any system, particularly this system today, we are believing this system. Features of a GST analysis tool that is available in BRE, that is a business rule engine. One tool I'm discussing, only one tool, and another tool also I'm discussing. So many tools are there. Real-time data access. First of all, it is a real-time. Up to date, up to this time, how many returns he has filed? Particularly GST returns, how many filed? One of the primary advantages of GSTR analysis tool is its ability to fetch real-time data from the GST portal. This ensures the lenders have access most up-to-date financial information, enabling them to make the decisions based on the latest business performance metrics. That is possible. If at all I am asking the borrower, you please bring the audited, sir. Even in the month of September also, my audited balance sheet of March 2024 not completed, sir. Today transactions are online, payments are online, UPI systems are online, or fraction of seconds amounts will be created. But he is telling that till September, my balance sheets are not audited, is not available, sir. Still it is in the process like that. They are telling to the bankers. One of the primary advantage of the GSTR analysis tool is the ability to fetch real-time data from the GST portal. This ensures that lenders have access to most updated financial information, enabling them decision based on the latest business performance. Comprehensive financial snapshot that is available. Once I have given a number only, that is whether the company, the PAN number or the GST number or the TAN number or the whatever, then only unique number I given, it hits and gives that to the information to me real time basis. This tool provides a comprehensive snapshot of a borrower's financial health by analyzing various components of GSTR, such as turnover, tax liability, and compliance history also. How many months he has filed? What is the delay? All are available for me. The detailed analysis goes beyond the traditional financial statements. Today, September, if at all I am asking my borrower, he will tell till it is not completed. Why should I wait for that the unaudited balance sheet? The real-time basis, accurate, low cost. Within minutes, I will get the data, offering lenders more nonsense answer understanding of their business operations. This is about leveraging advanced algorithms in the software BRE. Algorithms also developed. The GST or another tool automates the risk assessment process. Simply, I am not collecting. The data is also to be analyzed by the system. Finally, the system will give this much loan is available. He is not eligible like that. Again, I don't take all this data. The system is appraisal is completely completed, and whatever the reports are there, PDF format, and take the signature from the borrower and close that loan. And by lending the patterns anomalies in the GSTR data, the tool can be highlighted potential red flags. If at all any red flags are there in the GST returns are submitted by the borrower, that is also collected by the system. Enable the lenders proactively manage the risk and associated with the particular borrower. That's why what is a rule? What is a practice that is followed by the borrower? If at all the practice is against the rule, then automatically the system will give the report. Particular borrower. Customizable reporting. Lenders can generate a customizable reports based on the specific criteria and preference. And whether focusing on liquidity ratios, tax compliances, revenue trends, tool allows a tailor-made reporting, tailor-made report that aligns with the lender's risk appetite and evaluation criteria. That is possible because the tool is giving all this information and evaluate and whether I can take that particular risk is acceptable to me or not. Total information, if at all accurate information is available. Benefits to the lenders by verifying GST or analyzer. What are the benefits? Improved accuracy, creditworthiness assessment. By analyzing vast array of the financial data from the GSTR filings, lenders can more accurately gauge the borrower's credit risk. This includes deeper understanding the revenue streams, that is sales, expenses pattern, purchases, and overall financial health picture of the company. That is possible. In manual intervention, if at all is submitted the sales, only P&L account, I am not getting the full information about the month-wise data is not available. Only the consolidated figure is available in the P&L account. But here, month-wise data, ups and downs, what is the sales revenue, what is the expenses ratio, all these things. The automation aspect of the GST analyzer statement streamlines the process of collecting and analyzing the financial data. This reduces the time, the resources. I can utilize the manpower in a best possible manner. Otherwise, he is taking the calculator or the particular pen and writing and calculating. All these things is nonsense. Manual data entry. Analysis leading to cost savings for the lending institutions. With more precise, comprehensive data, lenders can make better decisions better lenders make better decisions. This leads to development of a higher quality loan portfolio with a reduced default credit risk that is required for the bank. Till date, that is not required because human intervention is there. Technology, rule, this rule followed or not followed, no loan, followed, loan. That's why it is called business rule engine, BRE. Next, lenders can tailor the product services. Based on this, the banks can develop the various types of lending products. In working capital, within working capital also, I can develop some more products. Nonsense understanding of that particular borrower's financial situation. This enables them particularly offer more personalized and competitive lending solutions. That is also possible. That's why GSTR analysis is one of the important item in a business rule engine of the banks. This tool aids ensuring compliance with the financial regulations by providing transparency overview of the borrower's tax filings and financial activities. This transparency is critical in maintaining trust, integrity in the financial system. Once the borrowers are followed the standards, it is better to him as well as to the bank, as well as to the society also. Once the loan turn into bad, society will be affected, the depositors will be affected. So these three people, the triangle people, the borrower, the bank, and the depositor, all people will be benefited on account of this digital footprints, because the bank's core activity is mobilizing deposit for lending purpose. Early warning signals, the ability to detect anomalies and a regular pattern in the financial data serves the early warning signal system. Lenders proactively address the potential issues before become the significant problems. That is there. And the market adaptability. In a rapid changing financial landscape, GSTR analysis tool equips with the lender to adapt quickly in the market changes. Real-time data access means lenders can respond promptly to shift the economic conditions or the borrower's circumstances. So that's why in BRE, business rule engine, GSTR analysis gives lot of comfort to mitigate the credit risk, to reduce the operation risk, operational cost, improve the efficiency and the customer satisfaction on account of instant credit. But okay, some of the customers are bad customers. Those who are going to get on account of fraudulent papers, they are aiming for higher amount. They may not get in this process. Utilizing advanced analytics gives lenders a competitive advantage in the market. They can foster loan approvals, more favorable terms based on comparative risk assessments. Once the borrowers are filing accurately and the tax is paid correctly and no deviations, then he will get the lower rate of interest. And by understanding the financial health of the borrower in depth, lenders can offer better customer service, address the concerns proactively and building a long-term relationship with the banks. All these things are possible in GSTR analysis. Shift towards a data-driven decision making, reduces biases. Some banks current ratio, okay, we will okay, for the time being the current ratio is less or the debt equity ratio less or the sales less. Some bias, that bias will not follow. 2 plus 2 is equal to 4 only in the business rolling journey. And subjectivity in the lending process and lending it to fair and more equitable lending practices, that is possible in GSTR analysis under BRE that is the digital footprints of the borrower. Scalability. The lending institution grow. GST analysis can scale accordingly, handily increase the volume of data and the transaction without significant increase in the operational complexity. Today, the knowledge levels of the credit, particularly in some banks, that is true, whereby the credit process quality is not increasing, and thereby the ultimate result is increase in the non-performing asset. In summary, the GSTR analysis tool not only refines the process, assessing the creditworthiness, but also bring the transformation in overall approach of the lending, foster efficient, transparent, responsive financial environment. Second point is legal data analysis. This is also another tool that is available in a business rule engine, that is a digital footprints. So legal data analysis, whatever the documents they are giving, immediately I'm sending to the advocate. Sir, you please verify. He is asking for the last 12 years the linked documents and 30 years in case of other documents, or encumbrance certificate, or search report, all these things. Today, legal data analysis is another tool available to the bankers. Whether in case of mortgage loans, the bank is having some doubt about the documents that are provided, title deeds of the property provided by the borrower is so many question marks. At the time of the account return into non-performing, then only the real picture, the color of that particular document, whether it is a Eastern color or black and white color. So if at all the property is sellable, no problem. That is Eastern color documents. If at all it is not sellable on account of litigations and all these things, black and white documents, then only the real picture of the particular documents known to the bankers at the time of selling the property, at the time of the account return into non-performing asset. Till such time, bankers are thinking this is a valuable document, this is a property is high value like that. Once it is unable to sell, then only the real picture they know about the real scene or picture of that particular documents. So the legal data analysis is also one of the tools that is available in the particularly the business rule engine. In today's fast-paced legal environment, navigating through complex legal documents manually can be both time-consuming and overwhelming. What are the conditions that are there? Whether the conditions are hampering to the bank or not. In future, if at all banks is the borrower not paid, whether the bank is ready to sell the property means the conditions are correct or not. And we are based on the opinion given by the legal officers. So ScoreMe legal data analysis, that is a tool that is inbuilt in the business rule engine, is designed to streamline this process, allowing the focus making on informed decisions quickly and efficiently. Leveraging particularly the machine learning, artificial intelligence tools are also inbuilt in the particularly legal documents analyzer. Legal information, extracting the key data to provide the clear, easy to understand the synopsis, etc. This service is ideal for legal professions, financial institutions, and the business requires a precise and rapid analysis of the legal documents. Few features of ScoreMe, the legal data analysis tool. That is another tool that is available in BRE, Business Rule Engine. Simplifies complex documents, legal documents. The primary function of the tool is to break down the intricate of the legal language and structures into more manageable, understandable segments. Whether the dealing contracts, agreements, or compliance documents, these tools ensures that comprehend essential details with needed legal background or not, with the help of the machine language as well as artificial intelligence also. Automatic information retrieval, manual data extraction from the legal documents can be laborious and error prone. The tool and automates this process, accurately retrieving the important information such as clauses, deadlines, obligations, and the rights. This automation not only increases the efficiency and also improves the consistency and the extracted data. Easy to understand the synopsis. Whatever the synopsis that is provided by the tool to the bankers and analyzing the documents, the tool provides comes a easy to understand synopsis. The future is particularly beneficial decision makers who need to quickly grasp the core elements of the document without delving into the meaning. Enhanced decision making. By providing clear, structured information, legal data analysis tool supports a better, faster decision making possible. The users can quickly identify the potential risk, opportunities, and the compliance and issues, and enabling them well-informed choices, etc., etc. So this tool is also very useful. Whenever the banks are giving loans, they will ask the collaterals. Collaterals may be the land, collaterals may be the building, collaterals may be the plant and machinery, and whatever the sale documents are there, all documents are to be verified thoroughly with the available data and the nomenclature, the wordings, all these things with the help of the machine language or the particular artificial intelligence, it is easy for the PRE to provide the synopsis of that particular document, the covenants and all these things. Versatile application. This tool versatile can be used for various purposes. Contract analysis, it will do. Identify the key terms, conditions and obligation. Compliance monitoring, ensuring the adherence of the legal standards. Risk assessment and due diligence, facilitating thorough review of the during mergers and acquisitions, particularly in the company finance. All these things are required. But how it works? Legal data analysis tool, snapshot of a machine language and artificial intelligence algorithm to process the legal documents. It automatically takes care of once it is scanned and provide that information, they upload that information, the analyzer will do all the process. Document upload, user upload the legal document to the platform and data processing. The tool analyzes text natural language processing techniques, that is called NLP. Whether it is in English or local language or Hindi or Urdu or Malayalam or Kannada, all these things that is available. Information extraction, key information is extracted, including the dates, parties involved, legal obligations, and much more. Summary generation. The tool generates a comprehensive summary that highlights the most important aspects of the document. Output delivery. They analyze the data of the summary presented to the user of easy to read and format. And this particular DRE tool goes to that particular register office and search report and they will get the encumbrance for the last 13 years. What are the amount whether this property is mortgaged to any other loan or not, that is also possible in the legal document analyzer. This tool uses for machine language, machine learning or learning and artificial intelligence to understand the document and retrieve the important information out of which helps to easy for a decision making process. Benefits using the Scorny legal data analysis tool. Time efficiency. One of the important is reduce the time required to understand the legal document, allowing professionals to allocate their time more effectively. Accurate consistency and the automated nature of the tool ensures data extracted, accurate, consistent, minimizing the risk of human error, cost of savings by reducing the extensive manual labor. Tool is particularly helps save the cost associated with that one, improve the compliances, particularly precise information at the fingerprints, maintaining the compliances becomes much easier. Next, one more tool is also available, bank statements analyzer. Suppose for the last 1 year, what is the pattern of the particular transaction, debit and credit? What type of debits, what type of credits the unit is getting means. If at all I have given that bunch of the bank statements to you, is it possible to verify? But the system will do. That is called bank statement analysis that will automatically it will do and give the output. So during that last 2 years or 1 year, this type of credits are there, this type of total, this type of debits are there, and it will interact with the other banks. What are the other bank the current account or loan account? All this information is available at one particular point with the help of business rule engine. Financial statement analysis. I need not calculate the current ratio. I need not give the inputs also like the CMA data. We have to give the inputs. Here there is no inputs. It directly catches the MCA 21. Whatever the data is available, audited, submitted by the unit, then it will collect and analyze, and the ratios will also do. And ITR analysis. Once this tool is also directly goes to that particular income tax return, how many returns filed, how much income, how much tax to be paid, how much defaulted, and what are the compliance to be completed, all are available. Not only ITR analysis, but also 26 AS also the tool will complete. And know your customer. Once the know your customer, whatever the documents which is given, the BRE engine particular goes to that particular service and get that information and give and included in the total appraisal format. So in future, particularly this type of business rule engines are there, not only for banks, but also other organizations. Business rule engines are developing stage, and some already developed. In future, there is a scope for the following audits in the banks. Audit in fintech companies. And a credit audit of the bank's high carbon intensity project finance, ESG. Audit procedures for expected credit loss provisions of Indian banks. And the artificial intelligence audit of Indian banks, or cyber security audit of the bank, or cloud computing audit of the bank. That is the opportunities are going to be happen. Or already some of the already these 6 areas already happened, but in a wider manner in the coming days, these are the potential areas. These are the coming opportunities to the professionals, not the earlier, whatever the various types of audit is there. Once the technology is happening, then the old, outdated, redundant, they will remove, and the new they will introduce. So to conclude, masterize the following IT developments: cloud computing, artificial intelligence, APIs, application program interfaces, and its importance, cyber security audit of a bank's expected loss provisions, audit of a high carbon intensity project finance, etc., etc. Then only we will continue in the market. Otherwise, scope will be less for other areas. So, to know more better in the banking system, particularly the latest developments that are happening, the BFSI board or institute is conducting fintech course. That is also useful, and they have already issued that instructions or guidelines. And if at all you are interested, you can pursue that one. This is in brief about the digital footprints, because due to paucity of time, and I have given a rough idea or a fair idea about what is the digital footprints. So the manual records are not required, and only the important points, footprints, particularly the tools that are developed by the banks for to extract the information from that tool, the Aadhaar number, the PAN number, or whatever the company TAN or PAN number, or certificate of incorporation, or individual cases, the email address, or the cell number that it gives to extract the wider information with the least cost, within no time, that is possible to the bank to assess the credit requirements of either corporates or mid corporates or individuals. That is possible. So this is in brief about the digital footprints. And Madam Nirmala Sitharaman also announced in the finance budget, no, banks should follow the digital footprints, not on the balance sheet. If you go to the finance budget also, the same wordings are there. Now the banks are developing business rule engines. Once in the rule engine, whatever the key number is there, key numbers like Aadhaar or PAN numbers or email, if at all we have provided, then the system will touches or hits the different servers, collect the information and collate the information and provide that whether the borrower is eligible for the loan or not. If eligible, how much loan is they eligible? If not, what are the reasons? All these things within no time that is available. For this also earlier, PSB 59, that is 59 minutes, or SBI 59 minutes. The products are also available, they released, but this is an advanced one that is called business rule engine, that is a digital footprints of the borrower or the business entity. Thank you very much for patience listening for the last the 2 hours like that.
Thank you so much, sir, for such a vivid presentation. And it's really a very innovative topic today that you have discussed. And our participants, they are really enlightened by your presentation today. So, sir, we have a few questions. How digital footprint in case of banks lending, it will help towards getting loan from banks? Is there any particular procedure for getting loan from bank through digital footprints, sir?
Madam, I could not catch your point. Again, you please.
How digital footprint, sir, how digital footprint in case of banks lending, it will help towards getting loan from banks? This is the first question. And is there any particular procedure for getting loan from bank through digital footprints?
Actually,
yes, sir.
How to get
the loan?
The question is not properly constructed. That is one thing. Okay. To get the loan from the bank, today even State Bank of India and other banks, they have followed the digital footprints only. If at all you require car loan, immediately you have to fill up online only. Once you have filled up the online, then automatically based on your PAN number, Aadhaar number, or whatever the account number is there, the system will calculate and arrive the conclusion, and they will system automatically verifies the CIBIL report and arrives how much you are eligible or whether you are eligible or not. All these things as on date for retail lending is there. Retail lending means housing loan, car loan, education loan, personal loan, mortgage. The same is Madam Nirmala Sitharaman is also announced. Why not you extend the same to the business entities like MSME units?
Sir, digital footprints, they are very crucial and it will assist banking system for lending purpose. So how CMEs can be benefited from this evaluation?
Madam, first of all, credit risk will minimize for the bank. Because based on the garbage in, garbage out. If at all I am taking the information of the borrower wrongly, then automatically loan may be turned into bad debt. Once the loan turn into bad debt, non-performing asset, bank profitability will reduce. Once the accurate data is available, and at the first stage only, I will filter the loan applications whether he is eligible or not with accurate information. Then thereby the non-performing assets will reduce, the profit of the bank will increase, the cost of operations will reduce, and the banks are they flourishing like anything in the future. In the future.
Okay, sir. Will digital footprint based loan assessment will be helpful in predicting probability of defaults by borrowers?
Yes, madam. So history tells about the future. History tells about the future. So even probability means after giving the loan, some rare cases the failures will be there. That's why I told about this one also. 100% loans recovery will not happen in the banking system. Not only in India, across the globe also. But here, earlier, based on the manual process, number of loans turn into bad. But digital footprints, that percentage will reduce drastically.
And sir, will this form of assessment it will lead to reduction in the bad debts?
Yes, definitely it reduces the bad debts.
Okay, sir, is bank ready to share their data, sir?
No,
Mhm.
they don't share the data. Because even today also in the manual system, they don't give the credit appraisal information to the borrower. They don't give whatever that is a confidential one. Even this information, whatever the business rule engine appraises a particular borrower information, it is a confidential information. They don't share that information.
Okay, sir. So thank you so much, sir, for such an excellent and informative presentation today. And so we will upload your presentation also in our VFI portal. So our HOD, sir, CMA Dibyendu Roy, he is additional director, secretary and HOD of our BFSI board. He has joined now, sir. We welcome. Yes, sir. He is additional director, secretary and HOD of BFSI board to give the vote of thanks.
Yeah. Thank you, Indraji. And good evening to all of you. Today we had a webinar on the topic of assessment of loans based on digital footprints of borrowers or business entities and not on balance sheets of MSME segment Union Budget 24-25. We thank profusely CMA Dr. P. Sivaram Prasad, former AGM, State Bank of India, for being the speaker on this topic. We thank CMA Vibhushan Nayak, President ICMAI, CMA TCS Srinivasa Prasad, Vice President ICMAI, for their continuous support for organizing various webinars in BFSI sector. We also thank CMA Chittaranjan Chattopadhyay, Chairman BFSI-B, for his leadership and direction to the BFSI board. We thank all the other office bearers of the BFSI board for their continuous guidance. We also thank CPT department, IT department for enabling us to organize the webinar. We thank our BFSI team members Indrakshi, Shantanu, Devabrata, Aditi for their support. We have an interesting webinar coming up on 21st September on the topic of fintech and their evolution in the Indian banking context. CMA Manoj Batra, who is head product and process government business group Bandhan Bank, would be the speaker. We hope for your participation. With this, we close today's webinar. Thank you all.
Okay, sir. Shall I close this one?